have a share of 50% out of this share, I might have ownership of this company. But someone who has a share of 25% actually have a voting right. Hello guys, hope you're all doing great today. I'm Obina Victor Eze, and today I want to talk to you about how you can profit from the stocks and share market. Now, I'll start by giving you a simple explanation or definition of what stocks are. Stocks are units of ownership in a company. Simply, they are just units of ownership in a company, and they can also be known as shares or equities. Now, let's put this into perspective. Amazon is a well-known brand. Now, Amazon decides to grow their business. They open their markets to investors such as you. It must not be the millionaires or the billionaires. They open their markets to investors. You can actually buy a unit. It could be 0.1%, 1%, 25%, 50% of stakes on Amazon. When you buy these investments, it helps Amazon to run their business. What they do is that at the end of certain periods, probably annually, quarterly, biannually, or continuously, they will share their profits with you as an investor. So when you get a share or when you get a stock or equity in a stock market, it means you're buying ownership in that company. Now, what are the three ways you can benefit from the stock market? Or what are the three ways you can profit from investing in stocks, shares, or equities? There are three different ways you can benefit from investing in stocks. You can benefit through capital gain, you can benefit through dividends, and you can benefit by having voting rights in that company you've invested in. I'm going to break it down in a minute. How do you benefit through capital gains? Now, you have $100, you invest it on Amazon, Google, Tesla stock, or some other stock in the stock market. If at the end of the day, your $100 grows to $110, the extra $10 is a capital gain you've gotten from your investment. You can either withdraw that money or you can reinvest it. So when you invest in a stock market, when you get a unit of ownership in a stock market, the profit you get over time, the profit you continuously get from that investment is the capital gain you've gotten from that investment. The second way you can benefit from investing in the stock market or buying shares or equities is through dividends. What do we mean by dividends? Dividends is a process whereby the company you've invested in, for instance, Amazon or Tesla, continuously shares its profits with its customers or with its investors. Let me say they have 1,000 investors that have invested in the Tesla stock. Tesla, as a company, either annually, quarterly, biannually, would continue sharing its profits at the end of every economic year or at the end of every period. They will share their profits with their investors. It means you're getting dividends of your investment. Apart from the profits or the gains, the capital gain you're getting from this investment or from this stock, they will share the entire profits of this company with you as an investor. It means you're getting a dividend from your investment. Lastly is a voting right. When you invest in a stock market, when you invest in a particular stock or in a company, remember we said you have an ownership of this company. What we call voting right is dependent on how many percent your stock is worth. For instance, in the UK, I started a company in the UK. I have a share of about 25%, or let me say I have a share of 50%. My partner who founded this company with me have a share of 25%. Some other investor have a share of 15% and another a share of probably 15%. What gives us voting right? If I have a share of 50% out of this share, I might have ownership of this company. But someone who has a share of 25% actually have a voting right They can vote for the directors of this company. They can vote for stakeholders. They can vote in the leadership of this company. I might be the founder of this company. I might have the biggest share, but I might not be the one leading in this company. I might not be the chairman, the CEO. I might not be the one handling affairs or how the company goes about its day-to-day business, because there are investors who have a voting right through their investment that can actually decide who stays and who goes when it comes to the leadership of the company. Most investors, they can benefit from the stock market or by investing in stock through capital gains. They can benefit through dividends. But if you have a 25% ownership or a 25% investment in most companies, you can as well have a voting right. These are the three ways you can benefit from investing in the stock market, which I've highlighted. I said stocks, shares, or equities are units of ownership in a company or in an establishment, and you can profit from these stocks through capital gains, through dividends, and by having a voting right. This is Obina Victor Eze. Until we see in my next video.